Expert guest in studio today is Al Fullerton from Aliom Financial Markets. Al, good to have you in again.
Nice to be here, Brooke.
We've got a down day today. We've had weeks of a run-up of a return to the risk appetite. It just feels like it's so hard to have conviction in this market at the moment, though.
No, it does, and I think we've seen a bit of profit taking coming into the play here. There's been a solid run last week. We have those European fears behind us. We've seen some positive PMI data coming out globally, a bit more of a bullish sentiment flowing through, and I think it got to the point when people just wanted to start taking a bit of risk off the table. Payrolls out this Friday, a bit of uncertainty coming into the markets there. So I think it was to be expected that people were going to sort of sit on their hands somewhat over the next few days as we wait for these all-important payrolls.
And it was interesting to watch the session yesterday, and I wonder if it's happening a bit today as well, that you can look at that US lead, but for example, yesterday we didn't actually move as much. We were kind of holding off. Are we more cautious here than they are overseas, or where are you looking?
I think we're looking down the barrel of our reporting season. So certainly we have some catalysts coming up that the US and the European markets don't have. I also think we've seen over the last few days that we've waited for China to come onto the newswires, and we've reacted somewhat to them. If they've come off a bit softer, we seem to have taken a bit of risk off the table. And if they've surprised to the upside and come out of the gate solidly, then we followed suit as well. So it does seem that we are taking some direction from offshore, but a lot from when China comes onto the grid.
Why the focus the last couple of days, as you mentioned, on China?
I'm not sure. I mean, I think it's obviously the resource story there. I think the ongoing, relationship between our resource sector and the Chinese demand, and that's really been the sector that's been highlighted. Obviously, with the upcoming election, there's ongoing discussions there about the mining tax, and the sector remains well and truly in the spotlight. So I think that certainly that Chinese demand story remains at the front of all these newspapers, and hence at the front of the minds of the investors.
All right, let's also bring in Noel Yates, who joins us right now from Macquarie Private. Let's get some thoughts from Al Fullerton from Aliom Financial Markets. Given that we only just recently got the guidance from AXA, and then yes, they put out the numbers today, it seemed pretty much in line with that. Why would the shares be down so much today?
Well, I think it's the example of anyone coming in line or slightly below forecast will be sold down in this market. We really need surprise to the upside. As we spoke about last week, we need a focus on what's going forward for the company, how they're going to actually progress over the next 6 months, the next uncertain time period, and I think that any results in line there will be sold down. And look, the AXA group, it remains shrouded in that the takeover miss there from NAB. So there's continued going to be uncertainty there. You've got NAB banging on the door, and look, the results were in line, but not enough to move the stock north.
And you actually thought that the comments they made about the Southeast Asian operations were quite interesting in that report today.
No, that's right, and it shows why NAB are really on the front foot here. I think that this is the outfit, this is the area that NAB really should be focusing on. I think that the Asian close to home synergies, not the UK exposures. Leave the US for the time being. Focus on the Asian story.
Okay, and so I mean we've still got this NAB takeover issue unresolved. We don't really know, and we're hearing from the ACCC as far as I know. What happens to this stock now?
Okay, well, I mean, AXA or NAB?
Let's go AXA.
Okay, let's go AXA. Oh, look, I mean, AXA will chug along sideways. I can't see any near-term catalyst until there's some resolve over this NAB issue there. NAB's been looked at as, by valuation sense, the cheapest bank there. The story is obviously people looking from exposure to the Aussie banks who are looking for a cheap play there. You might see some support in terms of that NAB share price getting supported up into our reporting season. So look, I can't see any near-term catalyst for AXA to move. For NAB, perhaps some near-term support there. Okay,
good stuff. Let's go into some other news of the day. WAN shares down by 15 cents on $6.87. They also talked, Al, about the election and the mining tax denting trading. Of course, they've got that big exposure, naturally, to the WA economy.
Yes.
Key takeaways from this one, though, today?
Again, sort of in line, sold down. We're going to see this thematic continuing through our reporting season. It is a WA recovery story there. Western Australian News has, in terms of the mining story, the recovery of the mining sector, that's what they're leveraged to. I think we've got to start looking for this online / media content that we're starting to see this emerge in terms of, do they have that exposure there? I like that sort of story about the online content. Will Western Australian News be in that side? And the whole sector has actually been sold down quite heavily. We've seen Fairfax as one of the most shorted stocks on the Aussie market, and so our media sector really hasn't had a chance to to come up for air, I suppose.
It was interesting. They made a lot of, they made a pretty big deal about the mining tax and the fact that that's created a lot of uncertainty. You see advertisers kind of put things on hold in terms of waiting for outcomes. Does that mean this is potentially a stock which could, see the relief of the federal election being out of the way?
I think yes and no. It certainly will have a positive reaction if there's an increased spend in the mining sector and their exposure obviously to WAs where it's all happening. So yes, there might be some alleviation, but how much that's priced into the share price, I'd say it's already pretty much there. I think that over the next few weeks in the lead up to the election, we're going to get a bit more colour in this space, and I'll be interested to see what the reaction is and what the correlation is between WAN share price and the resource sector as a whole.
Sure, and we'll get even more colour with News Corp reporting shortly. Is that right?
That's right. Tomorrow. Yeah. So News Corp and what I was touching on before about that online content, we've seen News Corp start to charge for some of this online content for the Times in London. Where you can charge for an additional content, for extra content there. And I remember we're looking at this stock a few months ago, and we're looking at Murdoch's comment saying that if they charge for their online content for the Wall Street Journal, so this is people who look at it on the BlackBerries on their iPhones, and if they charge $1 a week for that online content, it would add $100 million to the bottom line without really changing any infrastructure there. So there's a huge amount of upside for News Corp, and I continue they continue to hit headwind after headwind, and when we look at the price there, it's not factoring a lot of these positives. So it's a real stock to watch there. Reporting out tomorrow, and I really see that leverage to the US recovery story. So perhaps it's not quite time for them, but their time will come.
Good stuff. Okay, let's talk Kathmandu now as well, Al. It's issued a profit warning. It's prompted a very swift reaction in its share price. The outdoor specialist retailer said its full-year consolidated sales were higher than expected, but it lowered its earnings guidance just slightly due to a tough retail environment. It's also had to spend more money on advertising as a response to that weak environment just to get people in the doors. Now shares, have a look at that, down 21 cents at $1.47. Al Fullerton from Aliom Financial Markets. This is an interesting stock because, as you've pointed out to me, it's not your typical retailer. They don't gear up all year for Christmas, really. They've kind of got a back to front.
That's right. Yeah, look, Christmas is in July for Kathmandu, and I think
they do the winter clothing and the...
Well, that's right, the demand. And we saw that they bounced a month ago when the Kiwi snowfields were covered in snow. You saw Kathmandu have a solid run there. Yeah. What they're facing now is these sales have been brought forward, and it's hurting retailers and it's hurting Kathmandu. I think that we're seeing it in New Zealand, the rising interest rate environment is not helping. People aren't spending as much into they hiked rate to gain recently. So they are hurting over there. They had quite an aggressive store rollout, which I think they perhaps have fallen slightly short of, and this increased advertising spend. So you're having to slash prices to keep up with these sales that the bigger players are also offering, and at the same time having to increase this advertising to get more people in the door. So it's somewhat of a catch-22.
Yeah, and we haven't heard anything different from retailers right now, whether their Christmas is in July or December.
Yeah, there's been no Christmas at all for retailers.
Yeah, and the owner of Portman's, which is... the other one we won't mention the other day, Portman's JJ's Premier Investments. Yes. They were talking of the tough retail conditions, saying probably not even until 2011 things are going to recover.
Well,
What do you do with retail stocks right now?
Oh, look, I sit on the sidelines. I look for other exposures. I think I'm certainly not looking at this sector at the moment. I think some of these smaller ones, we spoke JB Hi-Fi. Perhaps if you have to spend some money, maybe look at someone around those. Other the reject shops, I think, is quite an interesting play as well. But apart from that, look, while the sector's so choppy, and it really seems that even if they're reporting in line there, it's a really unknown time ahead, and we keep on coming back to this point that unless there's some key catalysts going forward, then why buy the stock? And so I find it hard to see over the next coming months what's really going to boost this retail spend.
Yeah. All right, let's take a break. Al Fullerton is with us from Aliom Financial Markets for the whole show today. After the break, 20. Al, it would seem to be full steam ahead for Rio Tinto with more money being pumped in.
Yes.
What is the future looking like for Rio?
The market's reacted well to it, and they seem to agree with Rio. I think that the iron ore story, I feel that Q3, and this point was raised by Vale, Q3 will be quite flat, in Q4 you're going to see this demand start to increase from this developing nations, as well as this restocking of inventory piles. So, obviously Rio agree with that as well, and they're really looking to expand these operations and to spend some money which they have on their balance sheet.
Okay, I would love to get your comments on some analysis earlier that we got from Andrew Pease from Russell Investments. He was saying basically, look, the most bullish views for Australia really rely on stronger commodity prices, and that would of course deliver a nice income boost to Australia. They're not so bullish. They're bullish, but not as bullish, he says, as a lot of people out in the market. Less confident that we'll actually be boosted by some windfall gains. Let's just have a listen at what he had to say earlier.